Welcome to the Roy Morgan Weekly Update. The weekly indicators this week are positive. Consumer confidence is up 1.3 points to 89.3. And ANZ Roy Morgan inflation expectations are down 0.2% to 4.7%. But today we want to take a look at new Roy Morgan research which shows Australians remain committed to buying Australian-made products, with support sitting at a consistent 95%. In contrast, attitudes towards products from the United States and China have shifted dramatically since 2020. Already this year, Australians' likelihood of buying US-made products, that's the blue line, has plunged 14 percentage points to 40%, coinciding with Donald Trump's return to the White House in January 2025. Under the Biden administration, positive sentiment towards US-made products climbed to a high of 60% in mid-2023, but has obviously since declined. In contrast, Australians' willingness to buy Chinese-made products has steadily increased over the last few years and now has reached 34%, almost double the level recorded at the start of the pandemic. That was 18%. For further information, look to the Roy Morgan website. Now, coinciding with the rise in willingness of Australians to buy Chinese-made goods, the latest Roy Morgan retail data shows two Chinese online retailers, Shein and Temu, leading the pack in terms of year-on-year growth, along with US giant Amazon. The fastest growth is for Shein, up 27%, or 600,000 shoppers, to 2.6 million shoppers. Temu is up 24%, or 900,000 shoppers, up to 4.7 million. And Amazon is up 11% to 8.8 million shoppers. The rapid rise of these three online disruptors is reshaping Australia's retail landscape. Roy Morgan estimates Temu and Shein together added almost $1.3 billion in annual sales year on year. 1 billion additional sales for Temu and 300 million additional sales for Shein. Temu has close to an estimated 2.6 billion in annual sales in the 12 months to June 2025, compared to an estimated 1.6 billion just a year ago. And Shein has close to an estimated 1.3 billion in annual sales, compared to an estimated 1 billion just a year ago. Again, more information is available on the Roy Morgan website. And finally today, to how businesses are feeling. Australian business confidence for the month of August dropped 4.4 points to 98.6, just below the neutral level of 100. The decrease in business confidence came despite the Reserve Bank's decision to cut interest rates to 3.6% in August. This Roy Morgan Business Confidence series is based on interviews with 1,200 businesses each and every month, to gauge their views on their company's prospects, as well as their assessment of the broader Australian economy. Now, driving business confidence lower in August was a decline in confidence about the next year, both in terms of the business's own performance in the coming year and prospects for the wider Australian economy. Over the 2 months of July and August, the most confident industries were accommodation and food services, which recorded a business confidence of 125.4, well above 100. Financial and insurance services on 119.4, and administration and support services on 117.6. At the other end of the scale, we have public administration and safety on only 75.6, and agriculture, forestry and fishing on just 76, both well below any other industries. And that's a wrap. Thanks for your interest in Roy Morgan's latest results. For more detail, head to the Roy Morgan website, and I'll be back next week to bring you the latest data on consumer confidence, inflation expectations. We'll have unemployment and the latest data on Australia's increasing competitive streaming services. Thanks for listening.